Good morning, investors and traders. This is Naim Aslam live from London on our YouTube channel. And then today we'll be looking at European markets and, of course, the US futures as well. And what does it really mean? Where are your important support and resistance levels are? Or in very simple terms, where are those buy and sell zones? And then if there is an opportunity in this market, a bit about myself. I come with a wealth of 10 years of experience in hedge fund trading. I've worked as a hedge fund trader for Bank of New York Mellon, Bank of America. Now I work as a head of market analyst, as a chief market analyst for Evertrade, where I conduct all the research for the company. Now, in terms of a European markets, if you are a newbie trader and then you don't know what does it really mean for the European markets, then we really refer to the major indices such as the DAX, the CAC, the IBEX, which is your Spanish index. And of course, for the whole of Europe, you have two major indices like Stock 600 and Stock 50. As always, at the beginning of this video, every single day, I explain for our newbie viewers to understand that what the European markets really represent. So what we're seeing today is that the European markets were trading to the upside, but now they've started to trade to the downside. And this change in momentum or the upward momentum was very much picked up by investors and day traders from Asia, where the markets closed very strongly to the upside, mainly led by the airline sector. And that momentum over in Asia was picked up on Wall Street by traders from, where the markets closed again in a positive territory. The reason for that was because investors are hoping that another stimulus package, the framework for that stimulus package, can be agreed this week. Because this is what House Speaker Nancy Pelosi, who very much is controlling the conversation on one side, and Steven Mnuchin, the U.S. Treasury Secretary, who controls the conversation on the other side, it seems like that they're both coming to the same page with respect to the headline number, the main number that was the size of the stimulus package. Now, Republicans have increased that to 1.9 trillion. And that means more help for the US companies, for Americans, and lower unemployment rate. And of course, if all of that works out, that means higher stock market as well. But the stock market always gets ahead of itself. And the moment that these news comes, the traders or speculators start pushing the markets higher. And then perhaps you could also join this particular move, because if we do get a green light on the second stimulus, the chances are that yes, the markets will continue to rise, market will move to the upside. But over in Europe, investors are a little bit concerned about the surging coronavirus cases, where the situation is deteriorating. And this situation is very different on Asia, because in Asia we don't see that. Because in China we see the numbers are coming up very strong. In Singapore, the coronavirus cases have dropped to the lowest level, and the similar situation is over in Japan as well. So the coronavirus with respect to Asia is very much not too much of a concern now. But over in Europe and in the United States, this is the key hurdle for the stock market which is really stopping the stocks to move higher. So if we do see the situation deteriorating or improving, it impacts the stock market. And by stock market, I mean S&P 500, the Dow Jones, and the Nasdaq, the three major indices over in the United States. Now, in terms of gold prices, what we're really looking at is we're looking at the price battle with 50 and 100-day moving average. Why that is really important. The last time the price dropped below the 50-day moving average, we saw a massive sell-off in the price. And prior to that, when it happened, we also saw a massive sell-off in the price. Now the price is slightly above the 50-day moving average, but 100-day moving average, but it is still trading below the 50-day moving average. So the investors are hoping for the price to move above both of these moving averages, that is your 100 and 50. By the way, these are simple moving averages on the daily time frame. So if the price does move above that, then it means that gold, which is trading at 1900, it can really continue its journey towards 2076 price level, which is quite substantial gain given where the price is trading at now. But if the price fails from there, that means a move lower, a leg lower from here, and that can push the prices towards 1780 price level. Now, in terms of earnings, we are very much focused on Netflix today, because the earnings came out yesterday. The company failed to impress in terms of a new subscribers number, and investors are hoping to see a much stronger number. But overall, in very simple English, in a very simple way, we are expecting for the stock to trade lower, because yesterday in the aftermarket trading, Netflix dropped by nearly 7%. That's all. I'll see you guys next time.